welcome back to your weekly breakdown of GME and a little bit of the broad market, but mainly GME. This is the futures right now and shit. Shit. So what we're talking about today, I'm gonna try and keep it pretty short and concise. There's not really too much to update you on in the grand scheme of things. Obviously the market is like kind of going to shit, which was a big part of the whole GME it's gonna come to 22 thing. And so in this video, we're just gonna like do a bit of a catch up on where we left off in the last video in terms of positioning, where we're probably going this week, and what happens when we hit the bottom, because we're close. Not there yet, but we're close. Very, very close. So before we jump into the video, as always, if you would like to trade with us, the link to join is in the description of this video and my Twitter, as it always is. Had a great week last week as well. You know, it's a very tough market, but the consistency is there. We're all about risk to reward. The one I can show you right now is puts we took last week, literally right here, to short this box. And you know, just like it's pretty straightforward. We've been having a good time. The community's great. So if you would like to join the gang, you know what to do. In the last video, there were, I believe we were talking about how we are finishing the final leg down, and remember, since the very beginning, we're in a big expanding flat, meaning at this degree of trend, we've been essentially correcting the move that we had in June. Not up to our high in August, but what happened in June. And this is clear because we have a clear 5 swings up from this low, followed by 3, 3, and this is gonna be 5 down. I've covered this a lot, but again, just to hone in on the basics one more time, right? So let's just show you what it's supposed to look like. Let's find a better example. Okay, yeah, so it's the middle one right here is essentially what we're looking at, right? Expanding flat, meaning, how many times can I cover this, right? Or A leg and a B leg and a C. A is 3 swings, B is 3 swings, C is 5. B is greater than A, C is greater than B. Each leg is bigger than the previous, thus an expanding flat, because you know it's getting bigger every time. So you know, just going back to the basics of like what this should look like, you know, this right here, and then go back to the daily chart. It's pretty clear. I feel like, you know, there's not really much to be said as to what's gonna happen. Right, we expect to put in a final low around this area at 22, like I've said before, and we'll touch on like what happens if we don't bounce there. Briefly, right, this is most probable that you see on screen here. It doesn't mean it'll happen like this, but I would say this is most likely. There's an argument to be made that this could be part of a big flat within the wave 4, meaning instead of us extending down like this, a possibility would be ABC here, A, B, C, and then we get something like this where we have 1, 2, 3, 4, 5, and this is the 4, right? So this is a possibility as well. Will it happen like this? You know, there's really no way to tell, but based on previous, you know, this area of trend and, you know, past areas of, you know, the stock's lifetime, if I go back to, right, it's pretty much, you know, we'd be looking at something like this where you have A, B, and then C up. That's a possibility. I'm not saying it'll go like that, but just something to look for, you know. I only say that because we didn't have a clear breakdown, right? If we were entirely bearish from this high here, we would have gone 1, 2, 3, 4, and the giveaway was this level right here at 26 points. What is this? 6.5. I don't know the exact tick. Someone's trading view, but all right, let's go to Thinkorswim. So you pull up GME, and if it were a clear impulse down, right, we're looking at this as 1, 2, 3, 4, 5. We wouldn't have broken this level here, but we did last week. So this has to like make us be open to the possibility of some sort of big flat, kind of like the, you know, the really big picture that we're already in right now, where 1, 2, 3, 4, 5. But yeah, the summary of this is we you know, there's a possibility we still get a move up like this, you know, somewhere in this range before down. I'm not saying it'll happen, but there's a possibility of it. So, you know, so the giveaway for that will be, you know, if we break up to like this 30 area, you know, I'd say between like 30 and 32-ish, I'll give you the exact levels really quickly. Assuming current pricing holds, you know, it can always change, but as of right now, this is setting up a potential, not guaranteed, a potential move back to 30.85 to 32.49. It's a possibility. It doesn't mean it'll happen, but it's just something to be aware of, because it might, it might. It also might not. Like, there's no way to really tell. But on like a super basic scale, remember, obviously, my buy target is 22.29, and another way of doing that is we can measure the A leg up to the top of B and project it down, and I've showed this before too, but interestingly enough, this 2618 extension is right at the bottom where this gap fill is. Coincidentally, another time this happened, granted it wasn't the same structure, was actually this move right here. And right, what we can do is same thing, right? We measure it like this, and lo and behold, look what the top of that was. That Fibonacci extension at 2618. So it's happened before. Obviously, it's going the other way now, but just something to look out for. But let's say, finally we do find our low between 22 and 18.88 this week, and that's where we bottom, assuming we don't come below 18.88. Then we finally start everything that you see on screen after the low point. I don't know what the low point is going to be, right? But all of this is finally set up, and like I touched on the bull invalidation last time as well. It doesn't really change anything. It's just like the whole setup into it before, so you're kind of just like restarting it. But it doesn't mean anything. The point is we're very, very close to the bottom, and I'm excited because I'm gonna start to average in, because we're like here finally, So that's what we're looking at for GME for the most part, right? But then it's just full on like straight moon. It just goes, and like once we start to move, I'll touch on what all this means later, but we're not quite there yet, so there's no point really on like giving you like potential targets when I don't have a bottom. It's like fugazi. It's pointless. Now quickly, let's touch on SPY and what's likely gonna happen here. This is a mess, but it's exciting at the same time because we are not crashing yet. This is not the crash. It feels like it, sort of, but it's not quite the crash. I do think we're looking at something along the lines of this. I fucking hate how TradingView like messes up my skew. Like what is this, right? I don't know, it's more like this even then, but obviously the time is not drawn to scale ever. But realistically, right, we're looking at something like this with SPY. This is obviously, I trade off these projections every day, but granted, it's very important you don't go into each trading day with a bias. You just like, the count will supplement what my levels are telling me. Is there even anything else to say? The chart speaks for itself. As for the broad market, right, we're not quite at a local bottom. We're pretty close, in my opinion. Something like this, grand scheme of things. And the reason why I have it as 5 down and not an ABC is, well, I mean, obviously, this move down is strong. If it was an ABC, if it was ABC, right, we would have found a bottom here at like 371-ish. But we blew through like pretty much all of the big levels, telling me wave 3, not C wave. But the good news is, right, as to how we extend down, even if it's either a big ABC or it's just a big wave 1 into 2 and then 3, 4, 5. Either way, what this means is the next big bounce sets up an incredible short opportunity, with your stop loss being at the July high. So, when we get there, that's a very exciting thing to be trading as well, but we're not there yet either. So we're in like kind of like a weird limbo stage with the markets where, people think it's falling apart, but, we do need peak fear for us to rally, and we're very, very close to that. As to if we're actually at peak fear, who am I to tell you? But what I'm saying is, like, when we do find the low with SPY, be it, I can't tell you what it's gonna be. I just have it drawn out structurally. Something like this, low to mid 340s, 350s, somewhere in this range, and then a move back up to 380 to 400-ish. This low on SPY will be the GME bottom. I'm confident in that. That's how it always is. It's how it's going to be this time, and we're going to have everything rally. GME is going to obviously rally with the market. But that's like the whole, the days to cover, short interest, cost to borrow. That's not really my area of expertise. I literally just read the charts and I, convey what I think I see, and I've done a pretty good job with that so far. If you're new here, we've pretty much predicted this whole move down since like I was like 38 when I first said it, but it was gonna come all the way down. And so, we're almost done. Not quite, but we're very, very close. I think I'm gonna wrap it up there's not too much else to say. Once again, if you would like to trade with the gang, you know what to do. We do daily video breakdowns and streams every day as well, so members have found that to be super helpful. If you would like more information, feel free to shoot me a message. We're gonna go ahead and wrap it up here. If you guys enjoyed what you saw in the video today, cool. If not, you know, I don't care if you like or subscribe. The hell, I don't really make any money off of this, but we'll see you guys in the next one, which should be after we bought them, because I can only say the same thing so many times, you know. But thanks for watching. See you in the next one.